Welcome to Freedom Equity Group and the New World of Money. Hi, my name is Al Cardi, and I want to thank you for tuning into this very important presentation. You're watching this video for one of two reasons. Either you're looking to replace or generate an additional income stream, or you're interested in the latest, most innovative financial products that can provide not only a blanket of security for you and your family, but also substantial tax savings. What you'll see in here is a concept that impacts people that you can be passionate about. A smarter, more complete way to save money with higher income, more benefits, and tax-free. A multi-trillion-dollar industry that pays billions to producers, and how you can make up for lost time and lost earnings. The fact is, anytime you're evaluating a business, there's really three things you have to consider. Number one, is there a market for the product or services that I'm offering? Number two, is there money to be made in the business? And last but not least, can I do it? And I believe all those questions will be answered for you today in this presentation. So here are the problems, folks. Number one, 44% of the adult population cannot meet their financial obligations due to economic conditions. Second problem today that we face is most of our country's retirement wealth is in banks, precious metals, real estate, or IRAs, 401ks, 403b, otherwise known as qualified plans. And a large percentage of this money could be lost to risk, fees, and taxes. And the last problem we're going to address today is that every year, millions suffer heart attacks, stroke, or cancer. 70% of these people will live, but over half will go bankrupt in the process. See, at Freedom Equity Group, for us, it's all about protecting the American family, showing them how to retire with wealth and living benefits, all tax-free. Our vision is to create and lead the financial services industry revolution. So problem number one, 44% of the adult population cannot meet their financial obligations due to economic conditions. When you look at the corporate world today where most people are, frankly, are you being paid what you're worth? We were brought up where we go to school, then we go to college, right? And you get a good job. And then we learn later in life that we have a job helping someone else achieve their dreams in life or building somebody else's company. And then at that point, we determine maybe it's best for us to go in business for ourselves. Does it appear that the rich are getting richer and the middle class is being squeezed out? What happens if you have a good job and your company doesn't need you anymore? The facts are, from the Bureau of Labor Statistics, that incomes in this country are down $5,000 per family per year. There are over 242 million adults over the age of 18 in America, and only 49% of these people have a full-time job. And most of them don't like their job. That means 51% of our adult Americans work a part-time job only. 1 out of 4 Americans are making less than $10 an hour. Imagine supporting your family on $14,500 a year. That's what a full-time minimum wage job pays. FEG will help change America's future. Because, see, most people today really dream of owning their own business and controlling their own destiny, yet it never happens for most people. And that's simply because they lack the capital to go into business today or the experience in a specific field. Most of them do not have any type of mentor or coach to help them through the business. Many people lack even a marketable idea of what would I do if I was going to do something. The loss of security. My job may not be what I want it to be, but what would I do if I didn't have it? How would I pay my bills? And then last but not least, the fear of failure, so they don't even try. So what's the solution? We believe Freedom Equity Group is a solution. The 3 leaders of our company have proven themselves over the years to be reputable business owners and team builders, teaching people how to have success in the entrepreneurial world because we're a different kind of company. And see, we market living benefits to people. And what that is basically life insurance you don't need to die to use. And I know that probably sounds strange to you because those of you who understand what life insurance is typically has been made for if someone were to die, somebody else would get paid. Well, what if you didn't have to die to get paid? Changes the whole paradigm, doesn't it? Retirement planning, a more efficient tax-free income strategy, and guaranteed income. Today, more people fear outliving their money than they actually fear dying. Scary. Turn your 401k IRA into a pension-type income stream. But most importantly, we have a turnkey builder system. It's proven, it's profitable, and it's predictable. You run the system, and the system will build your business for you. You don't have to know how to run a successful business because we'll teach you with our turnkey builder system. Problem number 2. Most of our country's retirement wealth is in banks, precious metals, real estate, or qualified plans. A large percentage of this money could be lost to risk, fees, and taxes, and the majority will outlive their income. So where do most people put their money today? Well, they're putting their money in qualified plans. Most consumers do not understand the 3 major factors that affect their retirement account, and that's risk, fees, and taxes. You know, when you look back to 2009, Time Magazine wrote this article, "The ugly truth is that the 401k is a lousy product. It's a financial flop." Now, this was back 6 years ago. Today, there are many more publications written about how lousy a product that is. And here's one of the factors, risk. When you look at this chart here, this is the Standard & Poor's over the last 15 years, and you can see that that looks anything but stable. In fact, most people look at that and think it's an EKG. But the reality of it is many people cannot endure the risk associated with having your money in Wall Street type accounts. The second thing is the fees. Most of the hidden fees today, some as high as 5%. They say the national average is almost 3% are assessed to your account each and every year for your entire lifetime while you're in a qualified plan. So what does that mean? The more money you have there, the higher the fee ends up costing. This takes a huge bite out of retirement income. In fact, at 2%, it's half your retirement. So you can imagine what 3 is. And last but not least, taxes have a major impact on your income or spendable income down the road. And it starts where if you look at this chart back in the World War II era, we had tax rates as high as 94%, if you can imagine that. Well, today we have some of the lowest tax brackets in history. But where are they going? Well, regardless of where they're going, I think most people would guess that they're going up, and that's a pretty good assessment. What if you had a way to legally opt out of the tax system, pay lower fees, and never, ever lose money again? Well, that would be a pretty good thing, wouldn't it? Look at this chart dating back about 85 years. Where do you think taxes will go? This is based on government spending, historical tax rates, and where government borrowing went up, and that's the gray point here. The green is the actual tax rate. So if you look at the gap between tax rates and government spending is at historic highs. So where do you think taxes are going? Well, reading this chart, if you believe it, they would have to be going up. In fact, David Knight, author of The Power of Zero, wrote in his book, and this is quoted, according to the Congressional Budget Office, if Social Security, Medicare, Medicaid go unchanged, the rate for the lowest tax bracket would increase from 10% to 25%, from 25 to 63%, and from 34.9, that would rise to 88%. Now, at the time this was written, the highest marginal bracket was 34.9. Most of you probably know this, that presently it's 39.6. So it has already started happening. In fact, the 4 phases of retirement planning, traditionally we've been taught to put money away and take a tax deduction. Thus is what we do with a qualified plan, an IRA, a 401k, what have you. It's a pre-tax contribution, so it's tax deductible. And it is also tax deferred. However, when it's taxed is down the road when we need it the most, right? So it's taxable at your future tax rate. And if you don't use it all, it's taxable to your estate. Well, what's the alternative? We call it a tax-free alternative, where today you pay the taxes. You do not take a tax deduction. However, it will still accumulate tax deferred, but when you need it the most, it's a tax-free benefit. And whatever you don't use passes on to your estate tax-free. So our question to you is this here. Would you rather pay taxes now on the seed or pay higher taxes on the harvest? I think a picture's worth 1,000 words. I'm sure you're picking the seed. So what's the solution? The solution, I like to call it the tic-tac-toe of finance, where you win every time. See, in reality, most people are looking for safety of principle. But the only place you can get that is with fixed product, and they come with low returns, like banks, credit unions, passbook accounts, money market accounts. So it's safety, it's safe, but you don't make any money. And then there's the other side of the people that would like, well, I really want the upside potential of the market, but you can only do that with variable products. Those are Wall Street type accounts, mutual funds, qualified plans, and so forth. And there you risk principal. Well, nobody wants to lose money. Well, what if you could have the best of both worlds? What if you could have the upside potential of the market with safety of never ever losing money, and you can through index products? How do index products work? They never go backwards. All gains are locked in. They're liquid. You have access to cash at any time for any reason without penalties. And yes, it can all be tax-free. This next slide, red line, blue line, we like to call it, is a great example of what we're talking about. And I think a picture paints 1,000 words. And if I had one slide to show you, it would be this one. Because if you took $100,000 invested in 1997, this is what it would have done in the Standard & Poor's Index. And you can see that that red line is anything but stable, right? It goes up and down, up and down. Or you have the choice of what we call the blue line. Now, the blue line, you'll notice, has the upside, but it has no downside risk. So if I were to ask you the question that if you had $1 or $1 million, where would you put it? Red line or blue line? I know you'd pick the blue line. As a matter of fact, 100% of the people do. But here's the point, folks. 96 million people in this country today are on the red line. Why do you suppose that is? Because they don't know there's a blue line. What we essentially teach people is how they can be on the blue line by using indexing strategies that allow their money to grow with market-like returns, but zero downside risk. In fact, Tony Robbins recently wrote a book called Money, Master the Game, and here's one of his quotes. Invest like the wealthy, where you participate in market gains, but are guaranteed to never lose when the market drops. Warren Buffett, third or fourth richest person in the world, he has 2 rules of investing. Rule number 1, never lose money. Rule number 2, don't forget rule number 1. So I guess if indexing is a good strategy for Warren Buffett, I would say it's a good strategy for me. Problem number 3, 70% of people who are diagnosed with a heart attack, stroke, or cancer did not die. Good news. But more than half go bankrupt in the process. Many will not be able to go back to work. See, if you got sick and can't go to work, who will pay your mortgage payment? We know that the doctors and the hospitals are being paid if we have health insurance, but who makes the car payment? Who pays your health insurance premium? What about your college tuition? What about your retirement? What about food? The answer is nobody's paying that. In fact, today, more people fear a critical illness more so than death, because a critical illness means they're still alive, but they're not able to function, so therefore they can't earn money for their family. It's a big problem. Less than 5% of all workers are covered with critical illness. And yet every year, over 6 million people suffer a heart attack, stroke, and cancer. And if you look at the cancer statistic here, 3.5 million new cases each year. Average cost of $146,000. Over 65% of the expenses are indirect and not covered by traditional insurance. But yet today we have over 11 million people that are currently living with cancer. Well, that's good news that they've survived, but did they survive financially? More than 50% of the bankruptcies in this country are due to health-related issues, but 78% of them have health insurance. So the fact is, if you had $300 right now a month, where do you put the money? Do you put it into retirement? Well, yeah, you could. But what would happen if you died prematurely? Maybe you should put it into life insurance so that your family is protected in case you were to die prematurely. Well, maybe I should buy a critical illness type policy that'll cover me if I were to get sick. Or maybe I should put that $300 towards long-term care if I need those needs down the road. Well, the reality of it is you really need them all, don't you? See, we really all need to be protected if we got sick, if we die too soon, but more importantly, if we lived a long, healthy life. So what's the solution? The solution is a living benefit policy. The new innovative products today that protect against critical illness, heart attack, stroke, cancer, major organ transplant, blindness, and many, many others. Chronic illness, if you cannot perform 2 of the 6 daily living activities, or terminal illness, all at no additional cost. See, there really is a solution for every family. And I want to talk to you very simply about one of our products. It's called term insurance. Most of you know what term insurance is. And the old term, basically term stands for terminate because the coverage does not last forever. But what it does provide, the traditional term, is income tax-free death benefit if you were to die prematurely, meaning you have to die for your family to get the money. There are no living benefits. And once again, you have to die to use it. That's what 99% of America owns today. However, there is a new term, and the new term looks the same, income tax-free death benefit. However, you have no cost critical, chronic, and terminal illness that can pay up to 90%, meaning living benefits you don't have to die to use. So folks, if 99% of America have the old term, how many of them would want the new term that covered not only if they died, but if they got sick? Well, the answer is all of them would want it once they saw this. So how big is our marketplace, right? Is there a market for what we do? In fact, here's how some of these benefits work. We've had the opportunity or unfortunate opportunity to have some claim pays. Here's Johnny, 48 years old, when he replaced his 20-year term with a new 20-year term with living benefits. The new policy was less expensive than the old one. 5 months into his policy, Johnny was diagnosed with stage 4 stomach cancer. He could not work. Guess what? He received a check back in 2012 for over $344,000 payable to him. Then we have Bob, 59 years old, when he exchanged his permanent policy in for a new one with living benefits. Bob worked out daily, developed a sore leg. It didn't go away. Bob ended up being diagnosed with ALS. Bob received a check for over $189,000. And these go on and on. I'll just share one more with you. Greg bought an inexpensive term policy. He was a healthy guy, never got sick. In September, Greg had a physical with extensive blood work. Everything was fine. 3 months later, Greg goes in for his first colonoscopy and they detected stage 3 cancer. Guess what? Greg and his family were able to get a check just recently for over $198,000. So that really help him while he's out of work. So the point is, what if there is a product that solves the financial issues of critical, chronic, and terminal illness? Good news, there is. But in addition to that, what if there was a product that protected you and your family from market risk without losing the upside potential, that provided liquidity without restrictions, allowed access for college education for your children, all while providing for a tax-free income that you cannot outlive? Well, there is, folks. It's called Index Universal Life, the greatest wealth accumulation vehicle of our time. That's why we call it the new world of money. This is what the banks and wealthy have been doing for years. Others call it the Swiss Army knife of finance. Why? Because we've got you covered if you get sick or die too soon. But more importantly, we've got you covered if you live too long with an income that you cannot outlive. And yes, it's all tax-free. And here's why it's so important. We talk about living too long. Today, people live longer. If you look at statistics from the 100 Americans 65 to 69, here's what happens. 27 of them have died. 50 of them have incomes between $7,000 and $45,000 a year, and only 4 have incomes over $45,000 a year in their retirement. Most people in America wind up dead or dead broke. There has to be a better way. What's the solution? I like to call it a tale of two brothers. And here's an example of two brothers, both 35 years old, both saving $300 after tax, both earning 8% interest for the same period of time. Brother Ray is doing it the traditional way. All he knows, he went to work. Somebody talked to him about the 401k. He started contributing to his 401k. Brother B learned about the new concept or the new world of money and put his money in an Index Universal Life policy. Well, let's see how they fared. Well, Brother A was able to put $4,800 pre-tax into his 401k, and he also had a $1,200 match from his employer. He bought an inexpensive term policy for 30 years, as opposed to Brother B, who had no contributions to his 401k, put in $300 a month after tax, as opposed to pre-tax like Brother A, did not buy any term insurance because he had an Index Universal Life that already provided him $500,000 of coverage. So Brother A made a total contribution of $6,560, whereas Brother B made a contribution of $3,600. So who made the right decision? Well, if we look out 30 years, now they're age 65. Brother Ray's got $706,000. He no longer has the term because the term expired. And for him to renew that term, it would have been in excess of $12,000 a year. So he let it go. He did save $36,000 of taxes, whereas Brother B has $366,195 of cash in his Index Universal Life policy, still maintains a death benefit of $500,000. He saved no money in taxes. So let's find out. It's not how much you make, it's how much you keep. See, Brother B is able to take a distribution from his policy at $67,603 a year tax-free. If he lives till age 100, he'd receive over $2.3 million while still providing a tax-free death benefit to his family of well over $4 million. Well, Brother A has a lot more money, but he has a partner. And that partner is called the IRS. He has to take out $90,000 a year to have a net result in a 25% tax bracket of $67,603 to match Brother B. The problem is in 9 years, Brother A is out of money. So he runs out of money. Which plan makes you feel more financially secure? I think it's pretty clear, folks. Now, when you recognize the fact that, once again, most people are Brother A today, and they could be Brother B. Well, can you do it? Sure you can, right? We just have to show them the difference. So I've got a couple of questions for you. Number one, if you were Brother A, would you want to be Brother B? We know the answer to that. If you knew someone who was Brother A, would they want to be Brother B? Well, of course they would. Well, let me show you how we make money in our business, folks. What if you help just one family a month at a trainee position with our company? You'd earn over $14,000 per year helping one family a month. Now, before I go any further with income, let's understand what that could be for most people. That's $1,200 a month. That could be a house payment. That could be somebody changing their zip code. That could be their kids going to private schools, maybe buying a couple of new cars, having vacation money. So let's not underestimate the value of $1,200 a month. What if you helped just two families a month working with us part-time and made an additional $28,000 a year part-time as a trainee working with us? It could really change your life. Now, for the entrepreneurs that are listening in here today, I liken our business in some respects to real estate. With real estate, you essentially have two positions. You have a broker and you have an agent. And the agent typically works for the broker and earns half of what the broker earns. So in this scenario, the agent, if they sold the property, would get 3%. The broker would get 6% if he or she sold that property. But every time the agent sold the property, the broker would get a 3% royalty. So clearly, you'd probably want to be the broker if you were in real estate. You'd want to have as many agents as you could because you'd earn royalties on their production. Here's the challenge or the fundamental flaw in this business as well as the insurance general agency system is down the road, agents have the opportunity to do the same thing. So what happens? Someday you get a knock on the door and one of your agents says, I appreciate everything you've done. I've decided to become a broker. And by the way, I opened my office 10 miles down the road and a few of the agents are coming with me. So in essence, what's happened is you've done a lot of work, but you've trained your competition. Our system works very different from that. Our system is more of a profit sharing program. You can see a representative trainee. That was the percentage I was using on helping one or two families a month. But we also have broker positions. We call them builder vice presidents or trainers. And they earn anywhere from 70 to 93%. And they also have the opportunity to introduce other people to our business. And I'm going to use the example of Bill, Mel, Pat, Sue, and Tom. And here's a BVP with us that is adding agents to their business. And here's what they earn, though. They earn an 8 to 31% royalty on that business forever. So in that same scenario, when Bill or Mel or Pat walks in the office and says, I'm going to open up an office down the street, 5 miles or 20 miles, it doesn't make a difference. Well, you know what? They're encouraged to do that because their business is growing. So if we put some earning potential this here, because this is all to answer the question of, can I make money? Is there money to be made in this business? Well, Here's what you could do part-time with us if you were a VP in our company part-time. We're using an example of $300 a month, which is less than what an average consumer does spend with us, and it's comparable to Brother A, Brother B. At our vice president level, if you just help 2 families a month, and you had a small business helping an additional 4 families a month, 6 families a month being helped with a small little team, folks, that's a $90,000 plus income per year. Well, what if you grew your business just a little bit bigger? You became a builder vice president and you started helping 10 families a month. You were doing 1 a week. Now you're full-time in our business, so you're helping a family a week yourself, but you've got 6 other families that we're helping on a monthly basis, so you're doing 10 a month. That's an income of over $172,000 a year based on the numbers we're using. And for the real big thing, because I just want to show you one more example, what if you duplicated your efforts with multiple offices, where you built an office doing helping 10 families a month, and you develop some other offices doing the same thing? That could grow your income to a 7-figure income potential. So we talked about making $1,200 a month part-time, and we've talked about a legitimate 7-figure income. You might say, well, how can this all happen? Could I really do something like this here, not being from the industry? You certainly can, but here's what's important. This is your chance to be a part of a revolution in one of the largest industries in the world, financial services. It's a $7.3 trillion industry, over $470 billion in new premiums each and every year, over $200 billion paid in commissions annually, over 2 million agents. But here's what's important. Millions of people moving trillions of dollars. So how big is big? How big is the marketplace? See, FEG makes big business simple because we have a system. Any successful company has a system. In fact, Marshall Thurber says 94% of all failures are due to lack of a system. We have a system too. We're going to teach you that system. We're going to coach you how to run our system to be successful in our business. Our system is proven. It's predictable. It's duplicatable. You never have to talk to strangers or go into a stranger's home. You never make cold calls. You never run out of qualified prospects. And the fact is, folks, it just plain works. So in addition to the coaching and the training that we provide at the company, there's a few other things that we do because, we do recognize your efforts in different ways as well. Some ancillary perks, if you will, for doing a good job. We also have world-class trips that your family can go on and you can see the world through Freedom Equity Group, all as a result of helping other people. So where do you see yourself? Maybe you see yourself as a client, where you recognize the fact that living benefits or a tax-free retirement is something you need and want. Of course, we're glad to help you with that. Maybe you see yourself, in addition to that, as a part-time associate or a paid referral associate, where you can earn some additional income by being able to share this with other people. And for some of you on this call, maybe you don't like your job. Maybe you don't like your boss. Maybe you don't like your pay. Maybe you don't like the situation you're in. Maybe you want to change your zip code and buy a nicer home or buy your first home or do the things you want to do for your family. And you see this more as a full-time alternative to what you're doing right now. Of course, we can help you with any of those. So what's the next step? Set up a one-on-one meeting in the next 24 to 48 hours to see if this is right for you. You can do that live or online. Get your questions answered. Learn about our training programs. Determine how much time you can devote to the business. And of course, the type of income potential you could generate for your family. Get back with the person who invited you to this presentation and find out how you can get started. So the next step is yours. Once again, I want to thank you for taking the time today. I know everybody's time is valuable. Hopefully you felt that this is time well spent. Thank you.